What's your key explanation for why we have seen this bounce in oil prices over the last 10 days or so?
Hi, thanks for having me. Well, let me just say that heading into the end of the fourth quarter of last year, we had the biggest rotation in spec positioning the oil markets ever seen. Over the course of last year, we saw in excess of 1.1 billion paper barrels being sold out of spec positions. The market was simply very, very oversold. And of course, on top of that, the fundamentals are starting to change, and people are picking up on that. The Saudis are cutting supply from a record level of 11.1, 11.2 million barrels a day in November. They're bringing production down to 10.2 million barrels a day. The rest of the organization is going to join them. So we're looking for a very sizable reduction in supply coming from OPEC+. Of course, Iran sanctions will presumably be tightened into the second half of the year. And remember, demand is not as bad as we feared it was 3 months ago or even 2 months ago when people started talking about recession. The word recession seems to be fading. And eventually, not just the Saudi put on oil markets on the supply side is kicked in, but also I think the Powell put is starting to kick in as well with a friendlier Fed commentary in recent days as well. So that's the combination of those three factors.
So it sounds like you're bullish on the year, Francisco, despite the fact that we've already had this 9-day winning streak for oil prices. I know you were bullish on the outset last year too, and then oil had this massive plunge. Do you think it'll recover this year?
Well, we were calling for $80 a barrel by the summer last year, and we kind of got there. We went a little bit above and beyond. We hit $86 a barrel on Brent. This year, obviously, we are starting off for a lower base, but we think the supply-demand dynamics are constructive. We'll think we run up into the summer because of those factors that I explained. I think inventories are going to eventually rotate away from the big inventory build we saw in the fourth quarter into inventory declines, and that's going to push up prices as well. WTI, however, may struggle to follow Brent into the higher price band. So even if Brent goes up to 70, we think WTI maybe mid to high 50s should be the right range for WTI for this year. And then, heading into 2020, we're a little bit more concerned because by then we're going to have a lot of new pipelines coming out of the Permian Basin and maybe more supply than the market needs. Although, again, we need to see what producers do and whether it's a final change in tune after many, many years of growth. We start to see a rotation towards higher dividend payouts for shareholders, which have been very patiently waiting to get money back from their oil investments. So that's the other thing that I think could support the market heading into year-end into 2020. But again, we do have a lot more capacity by next year.
Francisco, what's your take on the week's trip and meetings for Secretary Pompeo in the Middle East and the latest tensions there across the region and what impact they could have on oil prices in the next few months?
Well, I think Pompeo has made it quite clear that the goal is to isolate Iran. Obviously, one of the things that surprised the market and one of the reasons we came down so hard in the fourth quarter is because we had Saudi Arabia, Emirates, Russia, and of course U.S. shale producers all hitting record production levels in September, October, November. And then, of course, heading into the big meeting on Iran sanctions, President Trump decided to give a few more waivers than the market expected because prices were high. Now we'll see what happens, but clearly the rhetoric is still quite hawkish, and we would expect those sanctions to be tightened, those waivers to be curtailed in half. Which effectively would provide support to the market because it is a clear foreign policy objective. Whether this results in additional supply disruptions is really very hard to tell, but also more turmoil in the Middle East could eventually lead to less supply in the region. Again, early to say, but I think the most clear indication is that Iran will be having a lot more difficulties placing barrels in the market starting in May, June this year. So that's another supportive factor here.